The genesis for Orbian's e-card arose in a meeting that I was having with the CFO of a major US consumer products company in the summer of 2017, with whom we didn't do any supply chain finance business, but we knew them well. They were a leading proponent of traditional supply chain finance. But he was starting to grow a little bit frustrated at the challenges they were facing in rolling a broader array of suppliers to the program, particularly those suppliers that were engaged in business that would be outside of the scope traditionally associated with supply chain finance. And by that I mean people like advertising companies, media companies, other service providers. To address some of these concerns, he had recently had some presentations from various providers of card-based services. All of them addressed part of what he was trying to do. None of them addressed everything that he was trying to do, and they were all priced considerably more expensively than traditional SCF. The coincidence that emerged during this meeting was that Orbian had recently formed a relationship with a very large licensed e-money service provider. This is a company that provides prepaid credit cards and corporate cards to the world's largest companies. Over the course of the next several months, we worked closely with the client, with our partner, the licensed e-money provider, as well as the advisors to the client, in order to complete a solution that was finally deployed to suppliers in the first quarter of 2018. Over its first 6 months, over $1 billion was transacted and accelerated for early liquidity by these suppliers, the largest transaction of which was $300 million, the smallest of which was $9, and it truly engaged all of these kinds of suppliers that we talked about a minute ago. So it really did achieve the goal that the CFO had had for being able to obtain the working capital and collaboration benefits with the broadest array of their suppliers. And it is now also being deployed by over a dozen of Orbian's other clients, some of whom have used it as an adjunct to their traditional supply chain finance programs, other of whom have said this is a unique proposition that we will just deploy as a standalone SCF alternative in order to create those working capital and collaboration benefits. For the buyer, there are two key components for the Express SCF. There is the core supply chain finance contract that they would sign. They then further sign a very short e-card agreement that is an agreement with Orbian Card Services for the provision of payment. Other than that, they need to make no changes. The IT integration is exactly the same. It's a very straightforward process that they would adopt. For suppliers, the second component, there is a very substantial difference. They no longer need to sign a supplier agreement. Instead, they register to be paid using the Orbian card. That is a registration that provides us and our regulated partner, the e-money service provider, with all of the information that we need for KYC, AML, and other regulatory purposes, as well as to be able to affect the payments that we need to make to them. And then the third component is the trust-enabled funding model that we have that is unaffected by this. Indeed, it is only enhanced from a security perspective by the additional layers of Express SCF and e-card services. It would be nice to think that it's changed the landscape already. I think that it will change the landscape. The big topic that Express SCF is addressing is the question of how to democratize supply chain finance so that it is available to all suppliers, regardless of their size, of the nature of the business that they do, and broadly speaking, and almost entirely, whatever country they happen to be located in. The challenge that has existed with SCF up until now has, in largest measure, been around supplier enrollment. And it's starting to become a significant challenge, and two main reasons. The first thing is that the original story of using SCF as a means to adjust the dial on working capital metrics by enrolling a handful of large suppliers in order to get a meaningful movement in working capital metrics out of a small number of large suppliers is now being put under challenge by the users of those services that are saying you really need to be applying them across your standard terms rather than just narrowly focusing them on a particular small group that are done in order to manipulate the terms. The second thing is that from a degree of sustainability of supply chains, and I mean sustainability in the very broadest sense of being a long-term relationship between a buyer organization and supplier organizations to provide all of them with the collaborative benefits of supply chain finance is becoming overwhelmingly apparent. And that's what Orbian's eCard solutions and Express SCF are designed to achieve, by making it possible for all suppliers, regardless of size, nature of business, or country of location, to join the program, participate in the benefits, and provide the buyer with similar benefits.